Hey guys, welcome back to Snowball Investing. This is the September portfolio update. Markets have had a bit of a downturn, but that's presented some buying opportunities. So as I do in all of my videos, I'll walk through all of my positions, what I've been buying, what I've been selling, and my general thoughts on the market. If you like these portfolio updates, please consider liking and subscribing as it really helps the channel grow. I don't have any affiliate links, I'm not selling anything, so I really rely on the community to help me grow as a channel. But without further ado, let's jump into the stocks and shares ISA. So the value of the stocks and shares ISA sits at £59,262, and the overall portfolio is up by 10,932, which is a little bit less than last month. I think it was up around 15,000. And the majority of that is due to Palantir, which I'll touch on in a short bit. But as you can see from the monthly chart, about a month ago, portfolio was sitting at 66,000, taken a sort of dip down to the 55,000 range, and had a little bit of a rebound, now sitting at 59,000. I like to compare the performance of my portfolio against the FTSE World ETF as almost a benchmark to see how I'm doing. In the past month, it's not been great, so I'm down 11.39%, when the FTSE World ETF is down by 0.17%. And the reason for that is I'm extremely heavily weighted in Palantir. But on the maximum chart horizon, I am still outperforming. So I'm up 16.85%, while the FTSE World ETF is basically flat at 0.07%. Jumping into the individual positions, let's start off with Palantir. So this sits at now a value of £27,744 and is, up at still a respectable 51.86%. Since the last portfolio update, Palantir has released its Q3 earnings, and at a high level, they basically came in line with expected earnings, which, given the valuation that Palantir was at around $20 before the earnings, was a bit of a disappointment and was one of the reasons for the sell-off. One of the positives at the earnings was that they were still GAAP profitable this quarter. I think Palantir are making a conscious effort to be GAAP profitable, as it's one of the requirements to be included as part of the S&P 500. The last negative catalyst for the share price has been that this week, Morgan Stanley have revised their price target from Palantir from $8 to $9. And if we look at the current share price, which sits at $15.18, it's kind of the reason why we've had the sell-off from about the $16.22 price range all the way down to $14.81. And the question becomes, am I concerned about this? And my response will be no. I think the main reasoning for the price downgrade, or actually it was an upgrade from $8 to $9, was that they're not monetizing AIP. And I think the reason for that is Palantir's taken a different approach to this. Rather than selling the product upfront for large cost, they're trying to get as many customers as possible bought in and trying the AIP product. When they realize how good it is, I think Palantir's vision is to kind of capture as much of the market as possible and think about monetizing later. Whether that approach works or not, time will tell. Next up, we have FTSE World ETF, which is up by 6.5%. SoFi is up 24%. It's holding up quite well in terms of share price, which is kind of disappointing as I do want more shares of this. So as much as I want to buy more shares, I'm being patient. I'm going to wait for that share price to come down before I buy. If it doesn't, fair enough, because there's plenty of other opportunities in the market. Nasdaq is up by 8.56%. Next up, we have SL Green Realty, which is up 52%. And I've been slowly dipping into this position every single month, dollar cost averaging in. I've got to give props where props are due. I did get this stock pick and twist from Chris Patel from the Finance Junkies podcast. So if you haven't checked him out, please check him out on YouTube. But remember, do your own due diligence before you buy stocks like this. I never blindly buy stocks because someone else is buying them. Do your own research, otherwise you'll get burned, like I did with Oatly, but I try not to bring that up too much. The other great benefit about SLG is you get a monthly dividend, and when I started investing, I always thought of myself as almost a growth plus ETF investor. But since I've been getting a monthly dividend, I've got to admit the dopamine hit from that dividend is very addictive. So I can see why a lot of people do like dividend investing. Meta is up 50.71%. We've got Truist at plus 3.45. And again, that's one of the other positions I've been building up. As growth stocks have been increasing in price quite a bit, I think there are still opportunities for some of these dividend value plays out there in the market. Google sits at a value of 1,314, is up 12.5%. Equally, Tesla holding up quite well at plus 10.48%. One of the most unloved stocks in the market currently is PayPal, so that's down 22%. I personally think it is undervalued, although I think the price could go lower. So my approach on this is just to slowly dollar cost average into this, especially if the price dips lower. Microsoft is up 20.84%. DraftKings is another position that's holding up quite well. That's up 78%. I did wish I bought more stock of this while the price was much lower, but again, hindsight is 2020. I did buy a bit more of UK property. That's down 1.98%. Ginkgo Bioworks doing quite well. I mean, that's had a bit of a rebound recently. That's up 13.66%. Persimmon is another position I'm very slowly pound cost averaging into, given it's a UK stock. That's down 3.46%. Probably is going to be a lot more volatility till the end of the year, so I'm in no rush to build out this position into a much larger position. A couple of quick mentions on the rest of the smaller positions. AMD is doing quite well in line with Nvidia and all the AI hype. Apple still holding up quite strong at plus 25%. And I've got 3 new positions in this portfolio. Number 1 is Enphase Energy, which is also part of the GIA and a much bigger position there. Dutch Bros, which is a coffee company similar to Starbucks. I think this might be a good long-term play. So I've been slowly building out this position. And lastly, Disney, which is also getting no love, and the stock price has been hit quite drastically. So I've got a small position of this. I'm going to keep an eye on it. If the price keeps dipping, I'll continue to build out this position. So that concludes the stock and shares ISA. I've still got around £5,000 cash left in this portfolio, and I add in £1,600 every single month. And my basic approach is just to dollar cost average into the stocks I have in this portfolio, which I think are undervalued. Moving over to the general investment account, the value of this sits at £14,249 and is up by £2,349. Comparing this portfolio to the FTSE All ETF, it's faring much better at minus 0.52%, probably because it's got more stable stocks than my ISA. And on the maximum time horizon, it's still doing very well at plus 23.29%, where again the FTSE All ETF is flat. Looking at the positions in this portfolio, not too much has changed since the last update. I mean, the 3 big tech stocks, Meta, Alphabet, Amazon, I mean, all in the green, very large positions, very stable companies. So I'm very comfortable with holding these long term. The only position I've been adding is Enphase Energy, as this position now is up to 1,512. It's taken an absolute battering since its earning call, and I think it's getting no love just because of the interest rates. The high interest rates means that people are less likely to invest in solar, but when I think the interest rates reduce and get lower, we could see quite a big rebound in this stock price. Most of the other positions are still doing quite well, with the exception of NEO. So Microsoft's up by 22%, Intel's in the green, Starbucks is up 21%, JP Morgan up 20%, NEO, the outlier, which is down 47%, and then Rocket Labs, which is still holding up quite well at plus 57%. So that concludes the GIA. I'm not adding as much cash into this account than I am the ISA, because I do want to maximize the tax benefits of the ISA account. But if I have some spare cash lying around, I will just plug it into this GIA, invest in, as you can see, quite good quality companies. Last up, let's have a quick look at my Vanguard general account. The value of this sits at £11,877. It's only made up of the S&P 500 ETF, and the rate of return is plus 19.6%. Even though I know and understand investing in ETFs is the best way to build wealth long term. There's just something about buying individual stocks, keeping track, reading articles, reading the quarterly earnings, that just keeps me really engaged with investing, and it's almost become a hobby. So I'm trying to find a balance between individual stock investing, ETFs, and it's also worth mentioning I have a work pension which is made up of pretty much the all-world ETF as well. So that concludes the September portfolio update. Hopefully that's been interesting, and I'll see you in the next video.